big return, well, good improvement. And just at the bottom line, David Shapiro, how do you like to have an operating profit margin of 47% in this climate?
I like the profits as well. Yeah.
You like the profits as well. Can that margin get any bigger, Nick?
Well, absolutely, because we haven't reached the production targets that I'd like to get to. You know, some time ago I did say to you I want to get the production closer to 1 million ounces a quarter. And believe
you're
me,
quite a long way behind that still, 871.
871. Next quarter I've said we're going to get to 900. And the quarters thereafter, as we get South Deep building up, we're going to do better than that. So I've got every confidence that we can certainly get to the 950,000 mark by the end of the year. That's not a shoot the lights out target at all.
Let's just unpack all of this. When I mention profit margin, that means if you're getting 100 rands worth of revenues in, you're making 47 rand profit. Any business person or anybody who knows even a vague amount of business will know that's a fantastic return on investment. But why would it be that if you're increasing your gold production that your profit margin would rise?
Well, simply because we get the leverage out of the fact that about 60% of our costs are fixed. And, you know, the one thing that's interesting, I tell my guys about the New York taxi driver. You know, he leases a cab in New York. For the first 3 weeks, he doesn't make any money. He's paying off the cab. In the fourth week, he makes money. And it's like the extra ounce of gold. The extra ounce of gold that comes through at a very low marginal cost. And it's those extra 10 or 15,000 ounces out of every operation that make a massive difference. And that's really the leverage for us.
So every little bit of extra gold that you put on top, because of those high costs, will give you an even better profit margin, and no consumers suffer in this regard.
Absolutely, absolutely. That's what it's about.
Why is it though that you've fallen all the way back to 871,000 ounces when you did very clearly have that target of 1 million ounces a quarter?
There's a couple of issues behind that, Alec. First of all, the Tarkwa CIL expansion.
That's in Ghana.
That's in Ghana. That hasn't gone as smoothly as I would have liked. We've had some commissioning issues. You know, it's going from 450,000 tons a month to 1 million tons a month. And I guess it's taken longer to get it right. The good news is, as of today, we're doing those volumes.
How big is that plant? And you talk about the numbers again, roll off the tongue, 450,000 tons to 1 million tons. Those are big numbers. But how, if you were to put it in, say, soccer fields, how many soccer fields would the plant be, the size of it?
Well, it's also about 2 or 3 levels, you know, so you could probably put the whole thing, if you split the different levels, you know, into probably more than a whole soccer field. You know, so it's complex. And then, of course, you've got the associated infrastructure around it. I was, in fact, up there about 3 weeks ago going through it. So it's a complex operation, but we're hitting our stride now. So next quarter, we'll see a big increase at Tarkwa. We should see a further increase the following quarter, so that will contribute. The other thing is Beatrix has had a shocking quarter. You know, 25% down. I had 8 out of 9 mines that showed an improvement, and I had 1 mine that went down 25%.
What happened there?
Well, it's a function of just mining discipline. We didn't get the volumes, we didn't get the right mining mix, too much pay, unpay versus pay, and then we didn't get the quality in the mill. We've made some changes there. We're now starting to get the basics right, and already you're seeing an improvement, so they will get better this quarter. Kloof has had a nice increase this quarter of 14%. I expect it to improve not this next quarter, but the quarter after. So we're moving gradually up, and that's why I'm being a little bit more cautious in saying, you know, another 4% next quarter, probably the same thereafter, and we'll get closer to the target. But the integrity of that target is intact. I'm not moving away from achieving that. It's only a question of the time frame.
When your predecessor, Ian Cockrell, bought South Deep from Brett Kebbell, there were a lot of people with raised eyebrows. When you guys went in there, you didn't find exactly what you expected. And perhaps it hadn't been maintained as well as it should have, etc., etc. Now we know why. How's South Deep doing under your watch?
Well, first of all, I think I said to you the last time I spoke to you that we did this comprehensive review from scratch. What can the mine do? What's it going to cost to get there, and by when? The good news is we do believe the mine can get to full production. We believe we can get there within 6 years, 2014. And we believe it's going to cost us about 8 billion rand to do it. And the key to success at South Deep is to start along that trajectory, because right now we're hovering just below 200,000 ounces. We've now got all the fleet in place to go up to 300,000 ounces. We've got the available face to mine. We've got the people we need to do it. We've got the hoisting capacity. We've got the milling capacity. So we're taking away all of the excuses, and I'm satisfied that if we spend the capital and we spend it wisely, we've still got a great ore body. The one thing that hasn't changed, the ore body's good.
The gold's in the ground.
The gold's in the ground. And that for me is the biggest comfort. We've stress tested it, and we've modelled in detail the next 10 years. So I'm very confident we're going to get to where we need to be.
You talk in these long periods, but that's what gold mining is all about. When you have a look, though, in the short term, what is the message that you're giving to shareholders?
Message to shareholders is it's all about positive cash flow, about generating real returns to shareholders. We're the only real dividend payers in the industry. No one pays dividends like we do. We pay 50% of our earnings. So we provide a dividend yield for shareholders. We also provide growth, and we've got 3 very interesting late-stage exploration projects around the world. One of those, I'm pretty sure, is going to be a mine. We've got South Deep building up. We've got the uranium project in South Africa that will be moving into feasibility study the second half of this year. And a lot of people are quite bullish on uranium, so it's upside there. So if we can keep sweating our assets and delivering what we should for shareholders, we don't have to do a lot more from where we are to generate quite a lot more for shareholders, if you know what I'm saying.
Nick Holland is the Chief Executive at Gold Fields.